Good afternoon, and thanks again for joining. This is Michelle Savage with XBRL US, and you are here for our webinar on data quality rule sets 9 and 10. I'm going to go through a few logistical points before we get started. We are offering CPE credit for the session today, and so we'll be taking CPE questions at 2 points during the day. If you are getting CPE credit, either if you signed up for it or if you didn't sign up for it, but you would like to receive CPE, go ahead and respond to the questions, and then we'll make sure that we follow up and ensure that everyone gets their certificates at the end. Also, as we go through the program today, we are taking questions, and so feel free to click on the Q&A link at the top of your screen, and you can submit your questions there. We'll take questions through the day. Everyone is on mute with the exception of the panelists, of course, as they begin speaking. So with that, I'm going to turn to our agenda. And we're excited today to have a couple of new speakers. We're going to have Bonnie Grassman. Bonnie is the Director of Compliance Services at Certant. Bonnie is, and Certant are a member of the Center for Data Quality. And Bonnie is going to lead us in a discussion with Heather Krupa. Heather is a CPA, Vice President and Controller at Global Water Resources. Heather is a member of the Data Quality Committee, which is the group that develops the rules that everyone uses to check their filings. And so is a really key member of the team providing the voice of the issuer to that committee. So our agenda for today is we're going to give a few points about the Center for Data Quality and the Data Quality Committee to just refresh your memory on that from Bonnie. And then we're going to go straight into a discussion between Heather and Bonnie about why issuers are involved, why it's important that issuers weigh in on the rules and are part of the process. I will then be covering a couple of CPE questions, and then we'll be turning it over to Campbell Pride. Campbell is our president and CEO here at XBRL US. He'll be talking about the final rules that are put in place for the 9th rule set and talking about some of the proposed rules that are out for public review right now. Then finally, I will be covering, I'll actually be doing a couple of demonstrations. I'm going to be showing you how to run the rules, how to participate in the public review, and how to check out historical filing error results. I'll also cover CPE questions, and we'll talk about some upcoming events and programs from XBRL US that we hope you'll all participate in. So with that, I'm going to move on to our next slide, and I'm going to turn it over to Bonnie to get us started.
Thanks, Michelle, and thank you to everyone joining us today. To get us started, we just want to have a quick introduction of what the XBRL US Center for Data Quality is for anyone that may not be familiar or joining us for the first time. The Center for Data Quality is a group that was created to address concerns surrounding the quality of XBRL data, and that's been submitted to the SEC, and the usability of that data. To best settle those concerns, the group is comprised of several XBRL stakeholders, including public companies, service providers, and data users. And this is a list of some of the companies that participate in the Center for Data Quality to address those concerns to the public and ensure that data quality. So more specifically, the Data Quality Committee works to improve the data quality by identifying issues that negatively impact the consumption and analysis of XBRL data. Once those issues have been identified and prioritized by users, the DQC then works to create unambiguous rules and guidance that any filer can use when preparing their XBRL for submission to the SEC. Prior to being finalized, those rules that have been developed by the DQC are made available for review and comment, which Michelle is going to show us later on, several times throughout the year to provide an opportunity for feedback from the public. And we have some tentative dates for 2019 if you'd like to participate in that, of when those will be available for public comment. The DQC also works with and provides updates to both the SEC and FASB throughout the year. We have several members that participate in the DQC, and here is most of those. And joining me today for a discussion is one of our DQC members, Heather Krupa from Global Water Resources. So welcome, Heather. So Heather, to start us off, what do you think and what would you consider some of the biggest challenges that issuers face when preparing their filings to submit?
Yes, thank you. So some of the biggest challenges that I've seen as an issuer is a lot of the new standards that come out and the ever-changing standards and staying on top of them, as well as not necessarily a challenge, but a pain point and a point that's always needing extra attention is your consistency within your filings. So making sure what you talk about within your MD&A section also matches some things that are talked about in your footnotes has been another challenge. And then finally, another large challenge, I believe, still remains XBRL.
Can you tell me maybe a little bit more about what specifically you think XBRL creates challenges for filers?
Yes, so a couple of things with XBRL. I think we still are in a time of not having confidence in XBRL as an issuer, not fully understanding XBRL and how it can be used. We, on a very general scale, for an issuer, there isn't necessarily an accountability, and I know we'll get into that a little bit later and what we talk about. But XBRL is not audited right now, and it's there, but it's kind of an added layer to our filing. And I categorize XBRL filers themselves into two categories. So you have your in-house filers, and then you also have XBRL filers that are using a third party. And even using a third party, you still have the challenge of reviewing what's being done. I think this goes for all, you have your trust but verify mentality, where even if a third party is doing it, you still need, it is yours, and XBRL is still owned by the company and the issuer. And so you do have to have a layer of review put in there. And when XBRL came out, almost 10 years ago or more now, there wasn't a change to the filing timeframe. So you were still required to file in the 40 days or 45 days for the queues. And so now you're adding another element to it, and that time frame and that need for review still remains. And I think that is probably one of the largest challenges to issuers.
Yeah, that's a great point, especially since, like you mentioned, this standard's been around for 10 years. And we still don't necessarily see a lot of education when people are maybe going through school. That happens. People are kind of left up to their own to either figure it out or get training from a vendor or do their own research when they become in a position that they need to be reviewing XBRL files. So I definitely understand how that could be really difficult.
Yeah, even if you look at the CPA, right? I mean, it hardly, maybe you'll get a question about XBRL. So it's not even, highlighted in your certifications that you're trying to get either.
Yeah, great point. I mean, speaking to that though, is there anything that regulators or vendors can do to make it easier for filers and help educate them?
Yes, I think the main thing is what we, as I feel as an issuer or filer, needs is more educations, and you kind of touched on that, more education, whether that be SEC guidance on how this is being used or how we can review this better, but also from the vendors as well. I know a lot of vendors pride themselves in being the most knowledgeable in XBRL, but it would just help if they could also kind of give more webinars or help take the edge off of the concern of XBRL, to give confidence in the reviews and to give confidence for XBRL in potentially preparing it and asking those good questions.
Yeah, definitely I think education around it is going to be something that everybody can do better about. But having established that XBRL is not exactly the easiest part of anyone's filing process, what are some specifics that you think make it difficult to really get it right and know that you've done it correctly when you're preparing your XBRL?
Yeah, so the main problem I see is that you don't know the right questions to ask. So with this fear of XBRL, and some people don't even know that you can go to xbrl.us and a full taxonomy is out there that you can search through. And so I think a lot of issuers, including myself, have either defaulted to the vendor helping us get there or trying to do it ourselves, and not knowing the resources that are out there for issuers, not knowing the types of questions to even ask, or a framework on what a review or even a starting point in XBRL could look like.
Yeah, especially for people doing self-tagging and not knowing where those resources are, you really do end up making a little bit of a stab in the dark and hoping for the best. So that definitely makes sense that having a compilation of available resources would really help you be a little bit more confident in your submission, especially when we have new guidance or new rules or new ASUs come out.
Mm-hmm.
When something like maybe the recent cover page tagging has come out or other new guidelines, do you have any resources that you do turn to for help in complying with some of those new rules?
Yes. So couple things on that. I actually have kind of networked myself with all the vendors because I think all of them have a different resource or a different tool that they use. So whether it be Workiva or Donnelly or Merrill and Topin, reaching out and just having a feeler in each of those, they have great webinars that are given, free trainings online, things like that are helpful. And then also, you do have a lot of accelerated filers. So I personally tend to turn to whoever else has already done it. My current company is an emerging growth company, so thankfully we're on a year delay from other filers. So we do tend to go out to the SEC website and pull our peers and see what else others have done to kind of mitigate some of that newness in our group.
Yeah. Having an example of specific disclosures that other people have tagged really does help. Kind of going towards how the DQC and the DQC rules can help filers. Having become a member of the DQC, can you tell us a little bit about why you decided to participate in the Data Quality Committee?
Of course. So I'm actually a very new member to the DQC, and I was at a seminar put on by Merrill Topin, and I've always been interested in XBRL. I started my XBRL career with Exelon, who was kind of at the forefront of adopting XBRL, and felt that I knew all these things were going on, but I felt kind of out of it, out of the knowledge and out of what was changing in XBRL. And so I wanted to dive back into it, which was why I initially started to participate. And then noticing that there was no issuer filer on the actual committee is what really kind of made me step up. I'm type of person, I see the need and will fill the need. So that's how I got involved in the DQC.
Yeah, having issuers involved is definitely important. Being an issuer yourself and everyone else that you work with on the committee, what role do committee members play in the process?
Yeah, so the committee actually will look at kind of the new standards that are coming out and will help to develop either guidance and validation of the rules that are going to be used, and then take a little bit more of a critical look at how the US GAAP taxonomy is built and what that looks like for the issuers and for the preparers that are out there, and how can we make things more clear and provide more guidance, by creating even the DQC check and validation that can be run, just trying to add that extra element of resource for issuers and filers.
Yeah, so a lot of that is pretty involved, and as you mentioned, the checks and the guidance and all that research and ensuring those work for filers. Thinking about that, what do you see as the most important part of the process that the DQC goes through when creating these resources?
Yeah, so I think one of the most important parts of the process is the back and forth amongst all of the committee, and really gaining an understanding of what was this tag meant to do, what was the reason for these changes, and then applying, okay, well, how are people actually going to use them? So, right, theory over implementation, and going through that process as a group. And all of the meetings are public, and anyone is able to listen in and participate and send comments in, which is great. So I think just the idea of having this committee out there is very powerful. And then the fact of having not just vendors and not just, XBRL on it, but also issuers and preparers a part of it is helpful and will make the DQC go to that next step and next level.
Yeah, I mean, as a vendor, I can't even tell you how many times we may come across an element or a filing, and there's an element that may seem perfect, but with the taxonomy changing a lot, things can get really easily misused or misplaced, and people may not even realize it, that they've been using that incorrectly. So yeah, it's a great point.
Exactly.
So how do you think the DQC rules that have been created can help issuers with some of the challenges that we've been talking about in our discussion of getting it right and feeling confident that they've got accurate data being reported to the SEC?
Yeah, so I think of one example actually that comes off the top of my head was treasury stock. And when I was at my prior employer, I kept saying, no, treasury stock, it's shown as a negative. It has to be negative. And I know that's one of the DQC rules is that treasury stock should not be negative. And it's the DQC's rules are out there to kind of help guide you in determining why that's the case, right? And so treasury stock inherently is a contra equity account. And so you don't have to make it negative because it already is, right? Just by the definition of it. And so understanding that these rules will help guide you to have a more accurate and more appropriate showing of your XBRL.
Yeah, that's a great example. We see that one all the time, and people, you think logically, exactly like you said, that, well, it's a negative amount, but that complexity underlying XBRL and how everything works together, you never would really know or think about unless someone pointed it out to you.
Correct.
So we've mentioned kind of the public review that goes on to make sure that these rules are being considered by the public. As a new kind of participant, do you think that other issuers should be involved in participating in those public review periods for the DQC rules?
I do, because I myself, I'm in utilities. I've been in utilities for a while, had a little bit of manufacturing background, but, I really think we should have at least one of every industry, at least watching this or participating in some form or fashion, because things can be very tailored to your industry, to your company. And, personally, I'm not going to know what the, financial sector needs. I'm not going to know what, an issuer in a different industry might be facing today. And so I do encourage everyone to at least participate in kind of what are the review periods and questions. Leases is a big one that we've been talking about for a while, and just getting an understanding not only of what's changing for XBRL and how DQC sees it, but also what does your company and industry need to make XBRL better? Because I don't think we will ever get to holding ourselves accountable for XBRL until we can really see the value in it. And if you don't think it applies to you, you'll never see that value.
Yeah, and especially as you mentioned, people in different industries, they may take a look at these rules for their company and say, well, I know that this is an exception because of my specific reporting scenario, but someone else may not see that right away or may be confused by the rule. And bringing that up in a public review and having that looked at may make those rules clearer for everyone else as well. So
Yep.
That's great. As far as kind of tagging in the past and things getting better, do you think filers using the rules has had an impact on the overall quality and improving that?
Yeah, and I think, so I believe it has. I specifically don't have the statistics on that. I think there is statistics that supports this, that the rules have improved data quality over time. If nothing else, it should give filers more confidence that what they're putting out there is accurate, or at least more accurate than just submitting because the vendor says it looks great or the vendor's rules made checks. This is kind of this is a way of checking to make sure that you are in line with what was expected of the tagging.
Yeah, I would agree with that. And as a vendor and somebody kind of that's been looking at this over time and running the rules myself, I can definitely say that every time we run them, whether it's, maybe filers aren't ready to make a change or want to review it a little bit more in depth, that every quarter we see fewer issues with these rules coming up that filers may have. And hopefully that means that overall the quality is getting better as well, and improving that consumability. Since like you said, if it's not accurate and people can't rely on it, it really makes it hard to have that impact.
Correct.
Is there more that we can be doing that the DQC can be focusing on to facilitate use of the DQC rules for issuers or make the rules better for users?
Honestly, I think, webinars such as this and getting the word out there, I will be honest, I was not aware of the DQC prior to that seminar I went to. And so just being more vocal, getting it out there, hopefully all of the attendees here now are going to check out xbrl.us and check out the DQC, make sure that they're running those rules on their own filings if they have not already. And I think just getting the knowledge that this resource and tool is out there is going to be the best use of it. And then also encouraging others to participate, because again, even the DQC, we're only as good as what we know is the need out there. And so just, really encouraging others to get more involved, I think is going to be the best way to make the DQC even better than they are now.
Well, hopefully your participation and comments here inspire people to reach out and participate in the public review and use the rules. So
definitely.
Great. Well, thank you, Bonnie and Heather. Thank you very much for that discussion. That was really interesting, and hopefully everybody on the call will forward this on to other colleagues of theirs and participate in the review. So what I'd like to do now is walk through a couple of CPE questions, and then after that we'll be turning it over to Campbell Pride, who's going to talk about some of the latest rules that are finalized and in public review right now. So first, let's go to the CPE questions, or the poll questions rather. And I'm going to launch this first poll. So the first question we have, what is the frequency of new DQC rule sets? New rule sets will be published for public review once a year. New rule sets will be published for public review 3 times a year, or new rule sets will be published on an as-needed basis. So if you are getting CPE credit, please take a look at that and look at the question and record your response. And this is a topic that I believe Bonnie covered in one of her early slides, talking about the DQC and how they're going about creating rules. So we'll give this about 15 seconds more. Okay, I'm going to close down this poll, and hopefully everybody's got their responses in. All right, okay, let's go to the second poll question. The Data Quality Committee provides progress updates to, is it to the investment community, to the SEC and FASB staff, or is it to the PCAOB? So again, take a look at this, and if you're getting CPE, or if you want to get CPE and you haven't, even if you haven't signed on for it yet, we can always get it to you. And respond to this question. We've got about 30 seconds more. Okay, I'm going to shut down the poll in about 10 seconds. And these are the first 2 of 4 CPE questions we'll be taking, and we'll have a couple more after Campbell. So I'm going to end the polling right now. All right, thank you for responding. And now I'm going to turn it over to Campbell Pride, who's going to tell us a little bit more about the Ruleset 9, which was just approved. Campbell?
Thank you, Michelle. Can you hear me okay?
Yep, we can hear you.
Okay, all right. So Ruleset 9 was recently approved, as Michelle mentioned, and there are a couple of things about this you should be aware of. There were some existing rules that we went back and changed, and there were some new rules that we added. So this includes both of the rules that were changed or amended, as well as the new rules. And I'll just give you a quick update on some of those changes. So for the first one, we have this rule DQC 11, which has been around for a while. And what this does is it just basically, there's a number of elements that are reported in filings where you can represent it using dimensions or represent them using a line item. And in many cases, particularly in the case of things like shareholders' equity, the statement of shareholders' equity, and the equity statement on the balance sheet, the same information is being represented, and usually cross-reference them. But in XBRL, in this particular case, they're represented differently, but the numbers should be the same. So these checks that they actually match. So there are a couple of, we added some additional dimensional equivalent rules between shareholders' equity and the shareholders' equity section. And this is really to reflect some of the changes in the taxonomy. So that that rule was updated. And then from time to time, a number of these rules, we will have to go back and update because of taxonomy changes. It can have an impact on the rules. Another change that was made was relative to revenue recognition. And one of the changes that when this standard came in, there were a significant overhaul that was made to the US GAAP taxonomy. And some of the changes there, one of the big changes was that when you report revenue, but you're reporting it by a specific product, that you include that on the face of the financial statements. And so one of the things that we did was when you used the contracts from customers element, and you used it with a product axis, we wanted to make sure that that this was actually being represented correctly. So we implemented this rule. The rule also applied to the notes as well. So it would say when you're using this element and using the product axis, you've got to report multiple products. And there were some reasons in the disclosures that the rule was being a little bit too aggressive. So this change basically restricted the rule just to the face of the financial statements. So if you had some errors for this rule in the past on your footnotes, those errors will no longer come up just because we made it less restrictive because there were valid cases of that situation in the disclosure. Now, just so you know, one of the things about these rules is we try to make them as accurate as possible and try to eliminate any false positives if we can. So generally, I think we're fairly successful at that. So if you do see an error that comes up and you disagree with it, please let us know. It's very important we get that feedback because one, we can change the rule if it really is a false positive. And that's good for everyone else as well because no one has to waste their time tracking down a false positive. And two, it just makes it's good feedback. We want to hear about it, about those situations where the rule may not apply. So that may be an area to expand the guidance we publish. The next rule we have here is DQC 80, and this was related. We have a negative value rule. We actually have separate rules for the IFRS filers and the US GAAP filers. But we're constantly adding to these rules because when a new taxonomy comes out, there's new elements that are added, and some of those can't be negative. So you'll see these negative rules are constantly changing. And the reason they're changing is not because we're saying elements can be negative now or making the rules more restrictive. In most cases, it's because of new elements that have been added. And as you may be aware, or maybe a lot of you are not aware, but if you're not filing an IFRS, but IFRS taxonomy it was updated in 2019 recently. So we just really wanted to make sure that we get those changes in. Then finally, this is a new rule, was DQC 81. Now, this is a single rule, but the impact of this rule is very, very broad. And what this rule tries to address is companies getting their calculations correct and basically doing correct element selection. And so this rule checks is if you've reported some information in your filing and you put it in a calculation, it checks to make sure that where that element appears in the calculation makes sense. And so the way that it does that is it compares it to the US GAAP taxonomy. And if you've changed the position of something and how it calculates unreasonably, then it's going to report an error. So an example of this might be if you've got assets and assets has got two children, it's got current assets and non-current assets. If you made non-current assets a child of current assets, then it's going to flag an error. Yes, and people have done that. So what this tries to do is it tries to eliminate or tries to identify those errors that people may have inadvertently made. In some cases, people have deliberately built a calculation that way. And in many cases, there is a better element they could have selected. So they've moved it around. So another example of this may be, you can see this quite often. They'll have non-current assets, but they will exclude PP&E from non-current assets. So there is another element that you should use if you wanted to report PP&E directly up into assets. There is another non-current assets which excludes PP&E that you should use. So there is the idea behind this rule is really not really to get the calculations correct, but to really give you an indicator of where maybe there's a better element that should have been selected. And if you don't know what that element is, because I'm not sure what you're meant to tag it with, certainly reach out to us because we're constantly expanding this guidance. We're getting FASB also to get guidance that will support this rule as well. So I think this is this rule you'll probably see come up in your filings if you haven't seen it already. And if you have any questions, please drop us a line to our helpline, and we'd be more than happy to give you help. Now, in many cases on this rule, there are a number of exceptions to this rule, just for obvious reasons, because a lot of things can be moved around. Is depreciation included in SG&A, or is it not? You know, if someone moved depreciation out of SG&A, this rule is not going to flag. So there's a whole bunch of exceptions. We basically went through the entire US GAAP taxonomy and identified those items which can be moved around and those that can't, and it basically checks for those. So from time to time, it has come up over the last, did a lot of testing on this. We went through all the errors for the last year. But if there is a case where you think it's incorrect, let us know, because then we can put that item on the exception list. This rule doesn't apply to extensions. So if you do create an extension, this element's not going to flag for those. So if we go to the next slide, please, Michelle. Okay, there are a couple of other changes in Ruleset 9 as well, and I talked about some of these. We covered DQC 15, but the DEI and block tag text blocks, we added an exclusion for S1, S2, and S3 style reports. And the reason for this is that these are filings. If you've ever done one of these, you basically report multiple years in one filing. And Ruleset 6 was helping to enforce one of the FM requirements, but it doesn't apply in the case of these filings. So we removed the rule for that. And then the other two on the other side really relate to cash flows. And these rules really reflect the changes in the cash flow ASU. The rule hadn't been that restrictive prior to the end of last year, because there was no way to really ascertain if the company had adopted the new cash flow ASU. But after the start of the year, everyone should be using the new cash flow guidance. So basically, these rules are basically were amended to basically ensure that everyone was following the requirements of the ASU. So this requires that, you know, some of the elements that you use in the cash flow, like the opening and closing balance and the increase and decrease in the cash flows for the period, there's specific elements that you should be using for those. So this basically just checks that you are doing that. You can go to the next slide, please, Michelle. All right. In Ruleset 10, it's not. There's a couple of rules. There's not that many rules in this release, but they probably do have a large effect on people who have a VIE, who are reporting a VIE in their financial statements. And for VIE reporting, it's if you've got significant interest in VIEs, there's a requirement to report those on the balance sheet, etc. And how you report those was a little bit vague, to say the least, in terms of the way that you are expected to do it. And we saw a lot of variability in filings in terms of how they were reporting their variable interest entities or their special purpose vehicles. So this rule is basically adds clarity around how you should do that, specifically how they should be disaggregated on the balance sheet and how you should do it, and also and how they should be also disclosed in the footnotes. So these rules here are checking for inconsistencies and making sure that everyone's doing it the same way. And there was a new axis that was introduced a few years ago called the Consolidated Entities axis, and VIE should be using that axis. But a lot of companies hadn't updated their filings for the introduction of that new axis. So this rule basically checks that and basically then guides you to use that new axis. So this rule is basically very helpful in that regard in terms of helping you get the filing right. So it's pretty easy. Most of the companies impacted this are banks, obviously because they have a large number of VIEs relative to the general population of companies. In the final rule, DQC 84, is durational aggregation. This is just really a sanity check on the filing. And what this does is that if you report multiple periods in your filing, and also you have a total of what those periods are, this checks that calculation, that those periods actually calculate to what you've reported. So, for example, if you reported first quarter revenue and second quarter revenue and half year revenue, it'll check that the first two quarters add to the sum of the total. And there is a degree of leniency in the rule in terms of, in some cases the totals may not match exactly, so it kind of has some tolerance built into it. Usually, most of the errors that this rule is detecting is where the different element is used from one period to the next, from one reporting period to the next reporting period in the same report. So this is actually just finding stuff that would be otherwise quite hard to find. It also finds in some periods an element that should have been negative is entered as a positive. In one period it's entered with one sign, but in another period it's entered with the opposite sign, even though it's going the same way. So it's surprisingly common. So this rule finds that as well. So it's just a good check. It's a good sanity check. In some cases, it's actually finding valid error. It's not really XBRL errors. In some cases, it's just in the filing's just wrong. If you added up the periods, the totals don't match, because it's not like you go and cross-fit everything across periods when you're filing your report. So it's actually quite a useful check, just for the general checks that you would do as part of your reporting process. So that's basically the new rules that have been added. It's in a public review period at the moment. So if you have any questions or you think there may be issues, you can let us know, and you can also run your existing filing, and against these rules, and it'll give you those results and see if you've got any of those issues affecting your filing to date. So I'd recommend you do that. I think Michelle is now going to show you how to do that. Michelle?
Yes, I am. And as we pull that up, as I pull up that screen, we do have a question, Campbell. It's about Rule 81. And the question is, has Rule 81 been updated to match the DQC statement of cash flow guidance for catch-all elements? And it might be good to explain what Rule 81 is.
Can you just go back the slide so everyone can see it?
Sure. Let me just, I think I need to, 81.
Oh, okay. It's not on here.
Here it is.
81. Yeah.
Sibling-child relationships.
So has this rule been updated for, what was the question? For
the question, has it been updated to match the DQC statement of cash flow guidance for catch-all elements? So this is the guidance that we published some time back?
Yeah, yes, it has. It should be, but if you find anything, if you see anything where you don't think it's correct, let us know. There have been a number of changes that have been made to this rule. This rule covers a lot of situations. So if there is, basically the exceptions work. We basically take all those those catch-all elements, and we basically put them in the list so that you can move anything out of those, and it's not going to flag any errors at all. But if there's an element there that you think that we haven't included in the exception list, please let us know. I think we've got the majority of them, but from time to time things come up, and then we say, oh yeah, that should be there. And we may not have detected it. What we do is we go through all the filings that have been made, like for the last year, and then we look at those filings and we go through and we look at all the errors and say, yeah, is this really an error or is it really not? This is reasonable. Company would have moved those out. So we've gone through that whole process. But if you're reporting something that's never been reported before, it may come up. But let us know, and then we'll amend the rule and fix it if there's an issue. And that rule can be updated pretty quickly, and we publish the list of all the exceptions on the website, so you can see that. And if you're a software vendor and you're writing rules to support the DQC rules, that list is there and available. So if we update it into the environment, that'll be updated as well. So if you are reproducing this rule on yourself, you may want to point to that list that's available on GitHub. That way you can always make sure that the rule is operating with the latest guidance.
Okay, thank you, Campbell. Okay, I'm going to go ahead and actually show how to run the rules. And let me just bear with me a second here. So if we go to the, I'm going to show you a few different things on the XBRL US website. From the main page on our website, if you go to the section called Data Quality, if you look at the little gray box here in the upper navigation, you'll see a whole bunch of different options here on data quality. You can find out a little bit about the center, about the Data Quality Committee. And then you can also check filing results and quality checks. And I thought this might be a good thing to take a look at first. What we've done is we have created a kind of a scrolling list of all existing filings with information about whether or not they had any kind of data quality errors. So if you look here, you can see, previous filings, Carnegie Development just filed recently their 10K, and on August 22nd, that's today, and they had 3 errors. And you can actually click on this and find, which were the errors, and here's the error number. And then you can open it up and find out that here they reported deferred tax assets valuation allowance with a negative value, and should not be reported with a negative value. So this is something that we've done recently, which we've had this up for a little while, but it just shows the historical reporting and from public companies and the error count that you see. And we've even started including some of the the 8Ks as well, as those are coming in with the cover page tagging. So that's one thing that you may want to take a look at. And something else, let me just go back to the data quality page, that you may want to look at is aggregated real-time filing errors, which you see down here. And as you noted, one of the questions that I think, Bonnie and Heather were talking about was, how are we doing? Are these rules making an impact on filers? Are they resulting in reducing the number of errors out there because people are using them? And, we're pretty pleased to see that the answer to that is yes. Here is a listing of the error count for axes with inappropriate members. And you can see that, back here, this is in 2016 when some of the rules were first published. We had quite a few errors, but then we've seen a steady decline since then. And here's on the right-hand side here, you see reverse calculation. And when this rule set was first published back in 2017, we started seeing a big decline in the number of errors. And I think the chart here for negative values, which was one of the first types of errors that we know everyone was noting, when those rules were first published, we really saw a continuing decline. And you can see here in those periods where there seems to be a kind of unusual looking bump in the midst of it, it's really because they're on annual filings, which 10Ks tend to have more errors than quarterlies, simply because they have more data points reported. And what you also see is that as new rules come out to update existing type of rule, like negative value, obviously, you see a sudden increase in error count there, but then a steady decline. So I think that's something else that may be of interest, for all of you to take a look at. And then let's take a look at how you can check your filing. There are a number of different ways to do that. And, all of the members of the Center for Data Quality, including, Bonnie, Certant, which is Bonnie Grassman's firm, have certified that they can run the checks successfully. So if I look here in, let's see, certified software. Okay, so here's data quality certification. You can see a listing of all of the different tools that have been activated and that are successfully running the various rule sets. So here it's running Ruleset 8, Topan, Donnelly Financial running Ruleset 8, Topan running Ruleset 8, and on down. And so you can see, which pieces of software are actually actively running the rules. And then that's one way to check your rules, is to use the certified software. The other way is to check your filing using data quality rules on our website. And we make this available. We do ask you to agree to terms of use, which I've already done here. But you can actually run just the approved rules here, or you can run the rules that are in public review and the rules that have been approved. So I'm going to run both just because I want to check and see, if the filing that I have, if it triggers any of those particular new rules. So I'm going to choose a file, and I'm just pulling in a zip file here for Carnival. And if I hit check filing, what this is doing is it's running the rules just as if you were using a software program to do it, a software program through an XBRL creation product. And we're going to run the rules. And then it's going to generate an error report that will tell us, which rules have been triggered, if any. And it'll indicate whether or not those rules are proposed or if they're final approved rules. And then it gives that issuer an opportunity to go in and make those corrections and revise those rules. So here we see this is the set of rules, or set of errors rather. And it looks like we've triggered a proposed rule. So this is in Ruleset 81. So that's that sibling child. And it says that the line item concept increase, decrease in accounts payable with a calculation of minus 14 million and a calculation parent of the net cash provided by or used in operating activities is represented as a sibling of adjustments to reconcile net income loss to cash provided by or used in operating activities. So it's telling us that this doesn't appear to be correct. And this is a really good way to actually participate in the public review, because you can come in here, see if your filing triggers any of the proposed rules, and then determine, is it a false positive? Is there something happening here that isn't, that you don't expect to happen? And is the error message clear enough for you to understand what to do next? Because that's another part of the public review. We want to make sure that the error messages that we create have sufficient information so that you can go and make a change and resolve that error. So that gives you a sense for how you can run these rules on your own and check and see what's going on there. So now, once you've run the rules and check to see if you trigger any of those proposed rules, we really hope that you will participate in the public review. So here, if I click on public exposure of validation and rules guidance, this is going to give me the public review section. Okay, so if we look down here, it shows us those rules that we just talked about that Campbell walked through. And it allows us, it tells us what kinds of things are we looking for, what's the concern with the proposed rule, how should it be revised, how does a revision to the rule that you proposed improve the usability of the data. And then you can just click on this general feedback and input your response here. So that's how to participate in the public review. And you might want to, you may have noted as we took a look at some of the certified filings or certified softwares that most of them were on version 8 right now. And we are working on getting companies certified, getting software packages actually certified to work with version 9. And that'll happen over the next week or so. It does take a little bit of time. The center members have to go through a fair amount of work to generate the results from running all of the filings, because they need to be, that's a process that we have to go through in order to certify them to be successfully running those rules. So I think we have a couple of questions. And some of these questions I'm going to ask members of our team here who are responding. Can you run the rules for 8K filings now as well? Campbell, do you want to take that question?
Yeah, you can run them, but it's not going to give you any results. We don't actually have any rules for the 8K filing. We looked at doing this, but I think most of the stuff is already covered by the eager filing manual rules. So you should be definitely running the EFM rules on that. And we don't go and, if the EFM rules already been written, we don't go and duplicate them because we don't want to report the same stuff that the SEC is already reporting. So for the 8K at the moment, no. But if there's things that you think should be checked on the 8K, or you're seeing issues in the 8Ks, we haven't seen any. But if you are, let us know, because then we can definitely put a rule in. So at the moment, the 8K filings there's no rules that I'm aware of that would run on those, unless the 8K included financial statement information, and that financial statement information was covered by a rule, then it would run. So, but for the 8Ks that are just like a non-financial statement disclosure, then they will not be running.
Okay, thank you. And then the next question that we have is, how do you prepare the zip file?
Bonnie, do you want to take that one?
Sure. This is once you've generated your XBRL files, wherever you have those saved, typically that creates a folder with either your ticker symbol or whatever prefix you're using, and the date of the submission is commonly how that's done. And if you open up that folder to get to your 5 or 6 XBRL files, depending on if you're filing it in line or not, you can simply select all 5 or 6 files and right-click on those and choose to send them to a compressed zip folder. And then when you are opening that up, as Michelle showed us earlier, you can simply select that new compressed zip file that you've created.
Great, thank you. Okay, I think now we're going to go through a few poll questions. So I'm going to open up the third poll and launch this here. Okay, and the first question we have is, Ruleset 9 includes approved rules for variable interest entities, dimensional equivalence, or durational aggregations. Which of those is correct? And again, for those of you getting CPE credit, please make sure that you respond to the question. And we'll take about 60 seconds for the full response. We have about 30 seconds left. Okay, just about another 15 seconds here. And then we'll be doing our final poll. Okay, I'm going to close down the poll right now. Thank you for your responses. And our final poll question actually relates to that Rule 81. So the sibling-child relationship rule in approved Ruleset 9 is designed to check for, is it incorrect calculation relationships, incorrect presentation relationships, or inappropriate use of signs? So just take a look at those responses, decide which one you think is most appropriate, and record your response. And we have about 30 seconds more for this question. Okay, just about another 15 seconds. Okay, I think I'm going to close that poll down. Thank you for your responses. Thanks for everybody for doing the CPE questions. And I'm just going to go to a few little follow-up upcoming events that we wanted to tell you about. We do have another webinar next week, believe it or not, because there's been a lot of activity going on. This one is an update on the SEC FACT Act cover page tagging. And our speakers will be Jay Knight. Jay is a partner at Bass, Berry & Sims, and he is leader of their capital markets subgroup. And I apologize, I forgot to put our second speaker, which is going to be Brian Castrantis. Brian is a senior manager at Richie May, And on that webinar, we're going to be covering a couple of different topics, but talking about some of the legal issues related to the rule, and then also covering some technical aspects of XBRL tagging. The other two events we have is the Municipal Finance Data Forum, which is going to be held in Naperville, Illinois. This is an in-person meeting. It's on October 3rd from 9 to 3. And this is covering, oops, sorry, I hit too many keys there. This is covering municipal financing and talking a little bit about how data standards in municipal financing can really make a big change in that market. And here we'll be featuring speakers from the bond buyer, from the Illinois Office of the Controller, from Northern Illinois University, and a couple of other organizations. So we're really looking forward to that event, and hope that we'll see you there. The last event I wanted to mention is our XBRL US Investor Forum, Driving Actionable Analytics. This is going to take place in New York on November 4th, and we're going to be featuring, our keynote speaker is going to be Chairman of the FASB, Russell Golden. We'll also have speakers from the SEC, from Global Blockchain Business Council, Morgan Stanley, the CFA Institute, and eBrevia, which is an artificial intelligence company. So we're very excited about that and hope that everybody signs on and joins us. With that, I want to thank our speakers so much for all the time and the work involved in preparing the presentation today. Bonnie and Heather and Campbell, thanks so much for joining us, and we hope that we'll see everybody at our next event next week. Thank you.